Hi and welcome to a midweek update. This is Kim Watson speaking for Ezeetrader. Just the big question coming through at the moment really is what's going to happen tonight when we get or this evening when we get the FOMC figures coming out and the decision is made. So what's going to happen to the markets? Now, generally, just a few things of what generally happens when we get interest rate increases, which is the expectation. So there's been priced in effectively to the market an 0.25% increase to interest rates. It's around about that's what's expected. Just checking. 0.25%, which would take it up the base rate up to 0.5% effectively. To the base rate. What do interest rates generally do? Generally, they will strengthen the currency. So we'll see the dollar would generally strengthen. Stocks, they don't like interest rate increases, so they generally come down. Bonds, two different types of bonds, the corporate bonds and treasuries, but neither of them particularly like interest rate increases, and often you can see them coming down. Reason they don't like interest rate increases is because the new bonds will be offered at a better yield. So the old bonds are of less value effectively and get sold. So this is generally what we'll see happening. However, if there's ever been a better telegraphed bit of news ever, probably this is it. The expectation of this to happen is massive. How much of this is priced in? Probably all of it. However, that doesn't mean to say we won't get volatility around the news. The important thing about the news overall is the basis of whether the projection, and people are looking for the projection of interest rate increases and the economy, so they'll be looking for more towards that than this figure itself here. As I say, this is priced in. It's the projections and the stance that's taken. Now, it's widely expected that the stance will be dovish. Now, if that's more hawkish, well then we'll see the likes of the euro selling off. Now, for stocks outside, now I'm looking at the country where the interest rates are being increased. Outside of the country or the opposite countries, and particularly what we may see here, we see the euro being sold off. Money may go from bonds and etc. It may go into it may go into shares and push shares up a little bit in Europe. So we may see the European shares move as a potential. Now, this is all ifs and buts. The problem with ifs and buts is the reality is always shown on the chart, and the ifs and buts are just what could happen. So the best thing is to wait and see what happens and trade it. Either post and news is probably the safest place. If you're in trades at the moment, you may be getting into a position where you can lock in and be a free trade. So if the rate is a little bit different, or more likely the comments that come with it are more different, and you're playing a short on the euro or the pound sort of side of things, maybe you can hold into those positions if you're in the money, and they may roll over. Of course, nobody knows what's going to happen with the markets and how traders will react. Just to note on the bonds, and there's been quite a big comment going around on the bond market, because the bonds have really some of the US bonds have really taken a kick in recently, but these are generally they're effectively junk bonds. They've got a significant problem in the junk bonds market because people have been looking for yield, and the yield hasn't been coming through anywhere else. Stocks, yes, it can offer some yield, but they're looking for high yield. We're certainly not doing it with interest rates, so traders and more likely the mutual funds, etc., have been heading for, some of them have got their own subdivisions, and they're looking for more riskier bonds, and these have been taken largely in like oil companies in the US. And these particular bonds, of course, with the price of oil coming down, the chance of interest rates increasing it couldn't be a worse mix of junk bonds in oil stocks. So those particular bonds have been taking quite a hammering. I think it was JP Morgan or the S&Ps. I read somewhere where they thought about 50% of them may default. So probably not a massive surprise in terms of if oil prices remain low. But for now, as I said, reality is, yeah, this is the theory. Reality is what happens after news comes out. And I think the best thing is to be looking to trade that. If you're in positions, safeguard them. If you're out of positions, be patient and wait and see. And whatever comes from this, it may be a more volatile period, particularly if interest rates, the curve seems to be a bit steeper than predicted before. We may see a bit more volatility, and the stock markets, particularly US stock markets, may be hit a little bit more. Anyway, that's it for me. Let's have a quick look at the market and where we are at the moment pre FOMC. Looking at a daily chart, the euro here. Yesterday we put in this bearish engulfing bar, which put a new high in, broke the lows there, so bearish engulfing on the dailies. Looking at just pure technically, this could roll over from where we're sitting here. Let's just make sure we're looking at the RSI there. What's going on with the RSI? Well, there was a bit of a divergence running through this. It's almost double divergence running through this move into the highs there. So potential for it to roll over. May want to roll back towards its daily 21 if it's going to do that. The one thing about it is in this sort of expanding wedge pattern. So which makes it a little bit more unpredictable. If we didn't have the news today, I'd still be erring towards the south side here, although as it's expanding, putting higher highs and lower lows, it does make it more unpredictable from a daily point of view. Okay, so that's the euro pound. Jobs front wasn't particularly great today, but we'd put a pivot swing in the pivot swing. Not quite closed actually, right properly there, but almost a pivot swing there. It's since sold off from that point anyway. Yesterday it sold off, it didn't come back into, and it's sold off again this morning, quite steeply here. Where's it going? Well, it could end up down to its monthly S1 at some point. It's certainly at this point it's easier to say it's more of a sell candidate than a buy candidate, but of course that's subject to the news this evening. Looking at dollar yen. Excuse my previous squiggles there. Dollar yen's had a bit of a rally again. Pivot did a proper pivot swing here. Today it's pushed on up beyond that. Looking at targets today, 21 moving average may be come into play for today's range quite easily. Looking at where we're pushing from here, well, the yen could continue in this upward move, and it's just sort of every time it sort of sits into or gets moving, it then consolidates in a bigger range. I mean, this was a range where it consolidated previously. We've effectively just come back and tested that range recently. This one here, we just tested it here. Maybe now it's coming back to test the lows of the prior range. Maybe that will create resistance, and we'll just get into yet another range, but not an easy one to follow from that respect. Okay, Aussie dollar. The Aussie, it's been trying its best to push up and continue in this upward note, but realistically there's a lot of negative aspects around the economy, mainly because its supply is the major supplier to China, and its market is weak. So there's no surprises when it does sell back into this range here, and it may be that the Aussie sits in a range for a longer period here. At the moment, again, it's taken out the previous low here, so it's put a lower high in effectively, and it could push back down to that monthly S1. So at the moment, looking weak. And finally, the Canadian dollar. Canadian dollar so linked with oil. So no surprises here when it's been shoving up here. The oil price has been shoving down. Yesterday we had a bit of a reversal in the oil price, and there is a chance that it could sort itself out. But all the time here we're just seeing effectively weakness against the US dollar. So the US dollar's pushing up here. Again, today's data may sort things out and show, change the direction of the Canadian dollar, but it's so dependent on the oil price at the moment that if oil keeps on selling off, we could see the Canadian dollar push up into its monthly R3 areas. Okay, so that's pretty much it for today. Hope you have a great one. I hope if you're trading FOMC or after the FOMC, you have a really good day. Take care. Bye for now.